About a month ago, the price of soybeans in Brazil reached about a 20% premium to U.S. soybeans. And for the first time in history, China wasn't buying any of our soybeans, the world's largest demand pull, importer. So this agreement is a win-win. Mr. Z looks good. U.S. farmers are happier, but soybeans have popped up to about $11 a bushel. I think that's a pretty good resistance, and I'm putting the final touches on my November outlook for commodities, and I'm going to put that level as the key inflection point. If soybeans can stay above 11, the whole commodity sector might be okay. And I think the risks are it goes lower because we're just starting planting in South America, and that's where the key source of pressure has been massive supply out of Brazil and Argentina.
So when China wasn't buying U.S. soybeans, what did that do to supply? Is there still an oversupply of soybeans in the U.S.?
Yes, hello, Scarlett. Well, there is now. There's an oversupply of corn because last year's farmers saw it coming. They saw the lower prices, and they tilted away from soybeans and planted the more corn. We had the best crop ever, so there's massive corn, so that price is still kind of hovering low. But soybeans have been the center of the geopolitics, partly because China's the world's largest importer, and U.S. used to be a large exporter. We used to export 50% of soybeans, but now it's down to 40% because all that supply came on in Brazil, and most notably it came on because of a big spike in prices in 2022. You see the elasticity there, and that's the problem with commodities is sometimes when prices go up, you just bring on more supply. Now we're heading towards a lower price cure. But soybeans are in the center of geopolitics, and the key thing is they've bounced. They're up about 10% in the year within broader bear markets. And it's the time of year you have to be very careful. If we just get another normal production season out of Brazil, pressure will continue as that supply just remains massive.
All right, here's the dumb farmer question of the day, my ignorance here. If I'm a farmer like corn, soybeans, wheat, am I reaping right now? Am I sowing right now? Or what am I doing in like October, November?
You're basically hurting. We're right near the end of harvest. And at this time of year, you're really active in the market. You're either marketing that corn, you're putting it into the market, as we say in Illinois, bringing it to the river to get down the Illinois River, or you're putting it in a bin and storing it. And so generally, or you're putting it into someone else to pay for storage. And soybeans are the cheapest to store commodity, typically, among most commodities, except for gold. So a lot of those have been put in a bin. I think they're being put out of the market now. Of course, if there's exports, we haven't had those exports, at least not to China. Corn, still probably sticking in the bin. You hang on a little bit. But that's the key thing is prices are so low now. They're right near the cost of production. So the Corn Belt's in a bit of hurt right now.
All right, let's switch over away from soft commodities and look at metals. Copper prices in London climbing to a record high. I'm looking at London copper prices up 1.3%. In New York, they're up about 1.8%. What's going on there, Mike?
Beck's a big shift, Scarlett. I appreciate it. Switching over to the elastic commodities to the less elastic commodities and metals. And the key thing about copper is it's going up for kind of the wrong reasons. It's supply constraint. There's been some issues this year with production, most notably in Indonesia and South America. So it's curtailing supplies and prices are going up on that. That's usually not enduring. Oftentimes it'll bring on that more supply and create incentive to reduce demand a little bit. So that's a bit of an issue, but it's also U.S. copper has been the center of the world universe. It popped to a new high early in the year. It got to around $6 a pound. It's dropped down to $4. Now it's running just above $5 a pound. The key thing for copper is it's highly correlated to the stock market, and copper will be fine as long as the U.S. stock market keeps going up, and that to me is a key risk that this highly economically sensitive commodity might drop if the U.S. stock market drops, and so it's all kind of dependent on stocks now.